In this episode, I'm going to talk about 3 regional areas in Queensland that are either going to boom or bust. July 2024, I released a video analysing 3 regional areas in Queensland, and I gave my insights as to whether I thought they were going to go to the moon or they were going to bust, and whether I personally would invest in each of those areas. So let's do a recap on these 3 locations that I analysed. Number 1 was Bundaberg, number 2 was Rockhampton, and number 3 was Townsville. And this was almost 6 months ago. Of those 3 locations, I picked one winner that I thought was going to outperform the other 2. So let's see if my one winner, which was Rockhampton, has actually performed better in the last 6 months than Townsville and then Bundaberg. There was one area where I said I personally would not invest into, and that was Bundaberg, because I thought it looked like it was coming to the end of its price cycle and that values might start to decline shortly. So let's see whether I was right or not over the last 6 months on that one. And I'm going to share with you not only where you could have bought and made $100,000 in the last 6 months, but also where the market's headed over the next 6 to 12 months in 2025. I've broken down the suburbs in Rockhampton Regional Council to see which ones have performed the best, and then we're going to compare these to the other 2 locations, Townsville and Bundaberg. So you can see at the top, Kawana has had the fastest growth in the last 6 months, 12.5%. Then you got Lakes Creek at 10%, Gracemere at 10%, Mount Morgan, you don't really count that. West Rockhampton, 9%. Rockhampton City, 8%. So you can see even the worst performer out of this list has grown in value by 5.6%. That's in 6 months. So that's an annualized increase in price of about 11 and a bit percent. So that's pretty phenomenal in the last 6 months. So if you had bought a typical $400,000 house in a pretty average suburb that just did 8% growth, you could have bought it off the shelf, blindfolded, knowing basically nothing about property. You could have made $32,000 from that typical house. If you had bought in the best performing area on a typical $400,000 house and you got that 12% growth, then you could have made almost $50,000 in the last 6 months from capital growth. Rockhampton was my top pick out of those 3 regional locations. So let's have a look and see how Rockhampton compares to Bundaberg and Townsville. I'm also going to share a little hack about Rockhampton and show you how some people that have bought into this market have actually made almost $100,000 in growth in the last 6 months. I'm going to pick my second favorite friend, realestate.com, and show you what's actually listed on the market and what's under offer. So I'm just starting at $450,000 in Rockhampton to prove to you how much the market has gone up by, because I was looking on here the other day and I was blown away by how much the price of these properties has gone up. So this one, $450,000, not sold yet, so let's just discard it. This one, $450,000, not sold. This one is under offer, $449,000. I bet my bottom dollar that 6 months ago you could have picked that up for $350,000, maybe even less. Somebody looks like they've given it a quick coat of paint as well, so that one sold for $450,000. This one, or it's under offer, I should say. This one also under offer for $450,000. It's in Frenchville, and it's 3-bed, 1-bath. Bet my bottom dollar you could have bought that $100,000 less, or maybe even less than that 12 months ago. This one's not under offer. This one's under offer, Park Avenue, $439,000. That would have been at least $100,000 less 6 months ago. This one not under offer yet. This one not yet. This one's under offer, $430,000. That's crazy for that house. This one, $429,000. So all of these have gone up, in my estimate, by about $100,000 in the last 6 months. This one's not under offer yet. You can see most of these are under offer. So this is a very hot market, especially at a $400,000 price point. This one's under offer, $420,000. Here's a list of comparable sales that have sold from April 2024. And I'm just going to go through the list and show you what has sold and how these have gone up by basically $100,000. Some of them maybe even more than that. So you can see 320,000 at the top, 295, 245. These are all at least 3 bedrooms I've filtered by, 255, 320, 295, 320, 250 for this one, 265, 320, and if you notice they are all in Bersica. I'm not picking on any other suburbs at the moment. 350, this is around mid-year, 280, 350, 320, 330, 310. That one actually looks pretty good, and it's 4-bedroom as well. 4-bed, 2-bath for 310,000. Crazy. 330, 340. I think you get the point how much the market has gone up by in the last 6 months in Rockhampton. Now let's have a look at Townsville Regional Council, and the best performing suburb in Townsville did almost 16% growth over the last 6 months, which is phenomenal. And you can see that as the top performer, and then it creeps down all the way to the worst performer, which is 2.5% growth over the last 6 months. All in all, Townsville wins according to these statistics. If you had bought in any one of these top suburbs, bought basically blindfolded, Blind Freddy could have made at least 10% growth, maybe even up to 15% growth over the last 6 months. And if you had done something special, bought under market value, off market, added value through a renovation, chances are you've probably done at least double that again. So if you've made 30% in Townsville in the last 6 months, that is very possible. So it looks like I've lost this bet, and the bet being that I predicted out of those 3 locations, Rockhampton would perform the best, where some people have made almost $100,000 on some very low-end properties in Rockhampton. And it's different from what the stats tell you, and I'm sure Townsville is different as well. But I want to try and justify to say that I may have picked the second best area out of those 3. They've all done phenomenally well over the last 6 months. The list that you see on the screen are the suburbs within Bundaberg. And let's have a look at the last 6 months of growth. This is listing from the top, the best performer, down to the worst performer. So you can see at the very top, this suburb, Bundaberg South, did 7.17% growth. And then you can see down the list, you got 7s, 6s, 5s, down to the worst one, 1.3%. But we can kind of erase that because the next worst performer is 4.5%. So Bundaberg actually did quite well over the last 6 months. Let's check out where I think Bundaberg's house prices are going in 2025. The price graph, at the moment, it is still growing. In 2021, it started to pick up. So it's entered into its boom cycle. It's been going for like 4 years now. So it's due to come to the end of its life cycle in terms of price growth. You can see the green is the volume. So the volume has definitely tapered off a lot the last little bit. Prices haven't moved overall as fast. So the typical price has been slowing down by the look of this. So let's have a look at the other stats and see how long this market cycle run has got left in Bundaberg. We'll have a look at the supply and demand, which typically drives prices among other things, but this is just a general overview. And on the supply, stock on market is almost nothing. The inventory, the amount of stock left is only like 1 month, so extremely tightly held market with supply. There's not that many building approvals. There's less than 1% of building approvals. Hold period is quite long, almost 10 years. So they're all really good signs on the supply, as in supply is very restricted. And then on the demand side, days on market is 46. It's a bit high, but for a regional area, that's actually quite low. To be under 60 days is still quite low. Vacancy rate is over 1%. Obviously, some areas are going to be more than that. Other areas are going to be less. So still really tightly held rental market, and rents are probably going to keep going up. From these high-level stats and the other ones that I've looked at, overall, the market of Bundaberg looks like it's still going to keep growing, probably etching up a little bit further, but its growth rate is definitely slowing. It doesn't mean to say that you can't buy in there and make good money. I personally would not be buying in Bundaberg. I still keep my status the same as 6 months ago, just because the market is too finicky there. There's risk that an employer could sack 500 people or 1,000 people. The economy's not doing as well now. So there is that risk on the demand side of things where the demand does taper off or people can't afford to spend more money on rent. so it caps the market. And same with purchasing. People can't afford to buy as expensive properties, but I do notice a big buyer demographic of baby boomers moving up from the southern states, Brisbane included, and I do know a few of these people that are moving up to that region because house prices are much cheaper than living on, say, the Sunshine Coast or the Gold Coast, and they still want to be coastal. So it's likely that the prices are going to keep notching up for a bit longer. We're just probably not going to see those phenomenal growth rates that we've had previously. But I think if you can buy astutely and you're doing something to add value, I do think that Bundaberg is still going to be a pretty good market to be in over the next 6 months, maybe even a bit longer into 2025. But I definitely would be monitoring that market on the supply and demand side, especially the demand, because it is a regional area. Now jumping over to Townsville, the price graph looks a little bit like this for all of the suburbs. It started to grow slowly after COVID or around COVID, then kept just notching up, and then it wasn't until around mid-2023 that it really started to accelerate its growth rate. And then now we've started to taper off a little bit with the growth rate, but it's still got some really good underlying fundamentals in Townsville for prices to continue to grow, and I'll show you those in a bit more detail. I'm just going to look at the supply and demand, and I'll give you my synopsis from looking at other data points as well. So the stock on market is virtually nothing, 0.3%. Inventory is less than 1 month. Building approvals is very low and hold period is high, which is great. So that's the supply. So supply is shown to be really restricted in Townsville as a whole market. And then on the demand, days on market is only 28 days. Vacancy rate is starting to etch up there. I'm a bit surprised by that being over 2%, because once it starts to notch over 2%, in terms of vacancy rate, generally that means that it starts to be a renter's market. So maybe we won't see the rental growth in certain areas that we have seen previously. And obviously this is an overall, it's not going to go and hone into specific areas and suburbs, but the demand is very tight, or very high, I should say. The supply is tight. So this is a really unbalanced market, and it looks like that buyers are not in the box seat here. Looks like it's definitely a seller's market, and it's probably set to be a seller's market for some time to come. My prediction for Townsville in 2025 is that it's going to keep growing in price. It's probably going to have a similar growth rate to what we've already seen over the last 6 or 12 months. It may not be as substantial as previous growth rates, but it's still going to be quite high in my view. And obviously you're going to have some areas that are going to go to the moon and probably do another 15% growth in the next 6 months. And then you're going to have other areas that may only get 5% growth in the next 6 months. Like any overall holistic market, you can pick the winners and then the losers. And in this case, I think if you're blind Freddy and you bought in Townsville, you're probably still going to make 10% growth in 2025. There's some really key underlying fundamentals with Townsville. It is a large population base for a regional center. It's got a population of over 200,000 people. It's quite diverse with industry, so it's a lot more protected than other regional areas, especially in Queensland. It's probably, in my view, one of the safer bets to be investing into. And I know last time that I said Rockhampton was my top pick, and it was my top pick because it was the cheapest market to get into. I saw that it had potential for phenomenal growth, which has actually transpired. There's definitely parts of Townsville that have that as well. Townsville probably the safer bet, but I'm going to give you my top pick, which I still think over 2025, I still think Rockhampton is going to outperform the other regional markets in Queensland, or at least the ones that I've compared. And here is Rockhampton's house price growth. You can see in around about late 22, early 23, prices started to notch up pretty considerably. So they've been growing pretty well for the last almost 2 years in regards to the pricing. The supply side is very tight. There's virtually no stock on market. Again, like the other markets we've looked at, there's only 1 month of inventory. There's basically no building approvals here, and the hold period is almost 10 years, which is pretty phenomenal. That means people are not selling very often. The demand is huge, 31 days on market for a regional area like Rockhampton is so tight. The demand is really high. Vacancy rate is almost 2%, which again, I'm shocked by, but I'm surprised it's not under 1% with vacancy rates. And the days on market have been dropping for some time. So I've given you my justification why I think the stats are a little bit out in Rockhampton and how the market has, in those lower value properties, actually done around 30% growth, which is absolutely phenomenal. But I still, apparently, according to those stats, it looks like Townsville was the better performer overall. So I may have lost that bet, but let me show you where the market's going in 2025. I think Rockhampton is definitely going to be a top performer into 2025. It may see the first 6 months go really hard again and see those prices jump by another 10% over the next 6 months. But depending on what commodity prices do, it might draw out some of that demand in the market. So it's very unlikely that Rockhampton is going to be undersupplied in the next 6 to 12 months just because there's virtually no building approvals and there's no current stock on the market. So unless everyone decides to sell it's in Rockhampton, which I don't think is going to happen given the hold period is so long, that the supply side is going to be tight for the foreseeable future. However, on the demand side, there is a slight risk that if commodity prices do soften off the back of the US with Trump and also with China slowing down, so if those commodities like coal do soften, then we might see some job losses in that area and it might pull out some of that demand. So we might start to see vacancy rates notch up a little bit. We might start to see then the days on market. But I don't know if that's going to happen until maybe the second half of 2025, and we might see some phenomenal growth in this first half, and it might also be extended longer than that because even when the market starts to slow down, it takes time for interstate investors that are pumping these markets to actually realize that there's less people to rent these houses. So it does take time for that to flow through, and you won't start to see it in prices until after the fact, after the horse has already bolted. So there's probably some really good gains to be made in Rockhampton in 2025. I definitely think Townsville is a great bet as well, a great place to buy in. And I think, unfortunately, Bundaberg is the lowest on the list. It's a smaller market. It's not as diverse. It doesn't have as many people buying properties. It's probably still going to keep notching up because you've got those retirees still driving prices, but Bundaberg has been booming for a long time, and I think that it'll probably see some positive numbers in 2025, but may not be as phenomenal as those other couple of markets. Now, just in closing, I do think there's one other regional market in Queensland that is going to perform exceptionally and probably outperform Rockhampton and Townsville. I'm going to do a separate video on that, so stay tuned. My name is Adam Panisi. I've got a couple $100 million of my own property projects on the go around southeast Queensland. I do these videos to help you guys out, get into the property market, buy investment properties, help you to retire early and not sign up to that 30-year mortgage plan. If you like the video, give me a like. And if you've got any questions, comments, please leave them below. I'm used to having all of those negative comments telling me I'm wrong and this and that and the other. Do what you will. This is only my opinion. Take it or leave it. This is definitely not financial advice. That is up to you. I do run courses and programs where I teach the same systems that I use to analyze the data. I also do a renovation program now, which is newly to be launched, and also a development course as well, where I teach the systems that I use and that I've used to amass a couple $100 million of property deals. Have fun. I'll see you on the next one.